Stop! If you're thinking about getting a debt management plan, don't. Okay, maybe that was a little bit dramatic. I'm Scott from MoneyNerd, and today we're taking a look at some of the main reasons to avoid a debt management plan. I've spent a lot of time on this channel highlighting some of the benefits of debt management plans, so now, naturally, it's time to talk about the problems. Let's jump into one of the most important downsides to debt management plans, and that's the fact that they're informal. There's a couple of points to cover here, so we'll tackle them one by one. Being informal means that debt management plans are not legally binding, so they're flexible. Although that sounds appealing, the flexibility isn't just for you. The creditors benefit from this as well. The creditors can review and suggest changes to your debt management plan as much as you can. At the end of the day, you owe them money, and they want to get as much money out of you as possible. So if they think that there's more money to be had, they'll use the flexibility of a debt management plan to get more out of you. Another thing to keep in mind relates to mortgages and properties. Long story short, your home is not legally protected under a debt management plan. For most people, protecting their home against repossession is one of their top priorities. So if your debts are significant and your home is at risk, then a debt management plan might not be right for you. As a side note, debt management plans are often best for people with less debt who normally just owe one or two creditors. If your debts are larger, say £20,000, or you owe multiple parties, or your house is at risk, then you might want to think about a different debt solution that's quicker and legally binding, that can offer things like debt write-off and house protection. Things you might want to investigate are things like IVAs or debt relief orders. Also, debt management plans do affect your credit score. If you're thinking about buying a house or you're taking out a car loan anytime soon, then you might be in for a tough time when you're applying for that credit. Don't make this mistake of thinking a debt management plan is a softer approach and it won't impact your credit report, because it will. Admittedly, debt solutions like IVAs or debt relief orders are normally worse for your score, but a debt management plan can still cause hassle if you're in need of credit in the near future. We've looked at the downsides of a debt management plan in terms of your credit and your property protection, but not everyone knows that a debt management plan can also impact your bank account. Here's an example. Let's take a look at Dave. He's taken out a debt management plan with a charity to pay back £5,000 worth of debt. Dave's income is seasonal, so he's expecting tough times ahead. He really wants to open a new current account with an overdraft, just in case he struggles one month. So he applies to a fresh account with a new bank. Now this could be a problem for Dave for a number of reasons. When you apply for an overdraft, that's a form of credit, and when you apply for a form of credit, you get a hard search on your credit report. Now, if you do lots of these in quick succession over a short period of time, that's an indicator to other lenders that you're struggling for money and that you're high risk. Worse than that, he might get declined for the overdraft and declined for the current account because he's got a debt management plan on his credit report. And if he gets declined at one bank and he goes to apply for another one, they're going to see that you've got those hard searches on your credit report, and they're going to be more likely to reject you as well. Now, worse than that, your original creditors that you set a debt management plan up with, they're going to see that you've got extra credit on your credit report. And now you run the risk of them pulling out of your debt management plan. If you're not looking for a new overdraft, but you do just want a new bank account, then there is some good news. Most major high street banks offer what's called a basic current account, and these don't have an overdraft, and they're specifically designed for people with a poor credit score. The next point is probably the most important downside, and it's all about how long you're under the debt management plan. Although a debt management plan can make your debts more manageable on a monthly basis, you'll likely be paying back that debt for years. The more debt you owe, the longer you'll be siphoning off a chunk of your income every month. In the short term, this can be a relief to your bank account, but in the long term, it can be a financial anchor. A quick bit of maths to explain this: if you've got £10,000 worth of debt and you can only afford to pay back £100 a month, it will take you over 8 years to repay, and that's not including interest or charges. Where if you go for a different debt solution, you'll take a harder hit on your credit report, but your debt will be wiped much faster. To put it simply, there's no quick way out of debt, but there are faster ways out of debt than a debt management plan. Indeed, a debt management plan is one of the slowest solutions out there, and they offer little protection from your creditors. That doesn't necessarily mean that they're awful, it just depends on what your priorities are. Earlier I touched briefly on how debt management plans can impact your credit score. Well, there's actually a lot more that you need to know about this. I've created a separate video on debt management plans and credit scores, which I'll link here, and I'll also cover a few tips on how to improve your credit score in that video. So click the link here or in the description. But thanks for watching, hope you enjoyed it, don't forget to subscribe, and I'll see you in the next video.